Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Wednesday, the 4th of December, 2019, just after 4:30 p.m. Central Time. Well, as you can see, down hard in the silver market, I mean really hard, and the gold market down about $4. The copper market up. What changed from yesterday? Well, what changed is, as we've talked here, I don't buy into anything President Trump is saying in front of NATO or what he says to the press as he's negotiating with China. I think he wears one face for the press, a very different face in the negotiation. It's been his hallmark, if you will. We'll see if he can get a deal done. In the meantime, the market is also looking at the impeachment inquiry, the Judicial Committee, and you walk away with your own opinion. The quicker that gets done, though, the quicker we get to maybe a USMCA trade deal, maybe we get to something else happening in the market, and of course, the negative would be no trade deal. But no trade deal by when? I personally believe it's somewhere between the 15th and the 25th. It could be either of those dates before Christmas or maybe before the next level of sanctions go on, that we'll get a better understanding as to how close we are or how far apart we really are from a deal. What I read in the press, I just got to be honest with you, I don't believe it all. I think the Chinese have their own take on it, and they tell the press there what they want to hear. Our president tells the press what he wants them to believe, and the negotiators, well, you don't hear a word from them. So we'll see what goes on. As you take a look at the gold market, we got a bit of a bounce so far for the week. We're up $8. Okay, but the market isn't over this key number of the 18-week moving average of closes. I use the market like this. When the market is over that number, I have an upside bias. Under it, I have a bearish bias. It's that simple. And then when you go back to the number, it's often a holding zone, if you will. If you come down, you figure out what the market's doing from there. And as you can see, you haven't been able to get back over that number. So I still think there's a downside bias. If we look at the chart action, I can't argue that the market is trying to make a stand here in this 1450 to 1460 level. A lot of time was spent there. The swing line is still up. It's got higher lows, higher highs. Therefore, until 1459.80 is taken out, the bias is what? To the upside. The trend is to the upside. I said the word bias. That isn't right. Bias is defined by where the 18-day average is in relation to prices. And if you take a look, the bias is up because you're over that number. So if the market were to drop further down, I will not be surprised to see the market try to hold in this 1470-230 level. Where's the resistance? Well, one of the points is over the market at the 100-day average. But I always want to know where the Bollinger Bands are. And the reason is the Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. So the first challenge to the upside is often where I tell you. That's where I think the pros are coming out of the market. Take it to the downside, same thing. That's the zone that I'm looking for. Can you break out of sideways action like you had here? You'd expect it. Are we developing sideways action? Oh, yeah. You can start seeing it as the Bollinger Band's flattening out here and flattening out there. Now, it takes more than a couple of days to develop that, but it's got the first inferences to me that it's trying to do so. I'm looking for the support there, but I see a market that got up yesterday and today to the upper Bollinger Band, got thrown back as I expect. Momentum-wise, the market is knocking on the door of being overbought. A reading over 70 is overbought. 69.22 is pretty close to that. So am I looking for the pros to offer a lot of defense on the market on pullbacks? Not really yet. I want to see more action. I don't like that the market is still in a 69 reading. When I come to GLD, the popular ETF, and we take a look at it, you can see you got up to the upper Bollinger Band, you're getting thrown back into it. Support back at the 18-day average. The reading here is 73. Any reading over 70 overbought. Yes, the market can use this sideways action and try to break out, but you have pretty good resistance at that upper Bollinger Band to that 100-day average. You need some element to kick the market, and what I'm not seeing is what is that element right now, be it to the upside or downside. When we come to the GDX juniors, the market yesterday, well, it got over the upper Bollinger Band. Today it fell back, and by day's end, it's still a pretty good job. It finished out at 39.21, as you can see, but what is the Bollinger Band number? 39.21, right within it, so that's okay. When I come to the seniors, as I'll call them, the GDX, the larger ETF, you still have an uptrend with higher lows and higher highs that you're missing in this market. You've had a lower low, higher high with a real sloppy pattern here. This is a little more defined, a sideways action. The market did pay attention. It got up yesterday to the 100-day average upper Bollinger Band, and while people say it's on its way, not me. I'm sure I was saying you're in a pretty big resistance zone, and what did the market do today? Down 29, back to under the upper Bollinger Band. The trend is still up. The support's back at 26.88. You're sitting at 27.48. The gold-silver ratio is not benefiting the metal market. To benefit it, traditionally, the gold-silver ratio favors the silvers. The base metals come alive. You're not getting that right now. You're breaking out again to the upside, and the market has been plugging along at this 18-week average of closes, and unfortunately, it's finding support against it. That keeps the metal market, to me as a whole, under pressure. And as you can see, silver market, what a wild day. You got up first, and let's take a look. This is yesterday's action. If you get to the upper Bollinger Band, I'm a broken record. The first challenge of it, I think, is going to result in resistance between that number and the 100-day average. Then, if the market pulls back, I'm looking to see what it does at the 18. What it did today is it went from the upper band and just missed hitting the lower band. Whoa. Pretty wild. Outside day down. So until today's high is taken out, I've got a swing line with a higher high. I've got a lower low. I have a mess of a chart. It's that simple. And what's it really trading against? Look at this 18-day average. That's the battle zone, really, the market's in. What do I like about the chart? That's another question. I like the sideways action with the narrowing of the Bollinger Bands. That doesn't mean they'll hold up that way, but it's the first sign that gets my attention. When I teach my charting, I look for certain sideways patterns or exhaustion patterns. This is so far sideways. I don't know that you'll get follow through one way or the other. I know you're not trending. In the copper market, you couldn't quite make it to the lower Bollinger Band. So what the market did, as you can see here, the 100-day average, if you rally back, that's your first resistance, with the 18 being the second. Are you trending as of yesterday? No. You have a higher high, a lower low pattern. All you did today is climb back into that resistance zone, and you're very much sideways. I think the market is saying it's confused. It doesn't know if the Chinese-U.S. trade deal on, off, where it's at. And copper would be a major beneficiary of a breakthrough of some type if that does occur. In the platinum market, I looked at this. You still have lower highs, higher lows. You're not going anywhere. And today you pulled back and finished 907.60. The low of the day is 903. 902.90 was the 18-day average. So you're finding some support there. But you're not in a trend per se. With the higher lows and lower highs, it's just, to me, a grind in the market, and that's what you're doing. The strength of the market has been seen in the palladium market. It's a new all-time high again. I had thought this at first was resistance, and I've said that over and over, but once you started moving again this way, I was jumping on the bandwagon saying, watch this market. You've got an embedded reading. You've got higher highs, higher lows. They don't lead the market now. It's what the slow stochastic does, in my opinion. Until that red line closes back under 80, this market's got all the shorts caught. Everybody short is with a loss going home tonight, as the market finished up $21 at 1845.40, and the only people making money that sold the high at 1846.50 down to that price. Everybody else, they're behind on this particular trade. Dollar index, what did it do? You went from a Bollinger Band high to a Bollinger Band low in 72 hours. Today, the market, by the way, no trend. You got a higher high, lower low. The market coming in with downside momentum. Now you're in oversold condition. You finished the day at 97.60. You did get as low as 97.35 and a half, but that Bollinger Band, you know what I'm going to say, the market tries to hold it on its first attack, and their first resistance, the 100-day average at 97.75. Now, this is our Cyber Week sale. Now, let me explain what this is before I run this all behind you. I have different levels of research, and if you buy any of the levels of the research, a one-year subscription, I am putting into this my charting course. My charting course retails for $179.95. Go to the website. You're welcome to buy it there. It is going to be included, but it's during the Cyber Week sale that we're getting. And people, I'm telling you, we had a lot of response to it today. So you get with it my charting software in 54 videos. About 6 hours of video time. They teach you the discipline of swing lines, moving averages, slow stochastics, the Bollinger Bands. Do you think I show you all the moving averages I'm using here and the tricks with them? I hope you don't think so, because I'm not foolish. I'm not the smartest guy out there, but I'm also not that foolish. You get the videos, you get the charting software, assuming you haven't had it in the past year. And now what you can do is you use the past data. You follow exactly what I'm doing. And then you follow me ideally in the morning with my morning subscriber videos, and away you go. I give you a game plan. And those videos I start recording at about 5:30 a.m. And when I finish them, they're ideally published before 7 a.m. Central Time. You can find out more about this by going to www.iraepstein.com under the word research. You'll see the different packages we have. One of the packages starts at $156 for a year, and you get a $179 value in the charting course. Not a bad deal. It's going to disappear. I'm Ira Epstein. You have a good day, and I'll talk to you.